Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to a trading room summary on Monday, the 1st of June 2020. Okay, we're nearly halfway there, folks. This year has flown by so far, even though a lot's happened, but does seem to be going exceptionally fast. So far as the Chinese stock market's concerned, any of you watched last week will know that we put a little move up like that. We've had a move up, pulled back, and it's currently moving long. There is a high probability of another correction, guys, given everything that's going on in the world. Am I going to try and trade it down? No, I don't think I am. What I will do, and this is generally speaking with the stock markets, is if there's a drawdown, then I'll look to trade it up after the drawdown. I do not think that bottom will be broken. I don't think we're in a bear market, but I do think that we could get a correction of the moves up that we've had so far. So that would be a safer sort of zone to start trading long from. Having said that, what we could get in the meantime is more of a consolidation or a flat correction. Um, so, in other words, these highs, I doubt that they're going to push much higher in the meantime. I suspect we'll probably get a bit of a sideways move, and somewhere along that, we may get a dip before going long. But I'm not going to try and trade it down any longer. I was trying for quite a while to trade it down, but I kept getting it wrong, guys. Not specifically this chart, but if we go over to some of the other ones, the Aussie 200, for example, yet again, there's it pushing up. I suspect it will probably consolidate rather than pushing on up, folks. And then if there is some major problem, either the China US situation, if China moves on Hong Kong in a violent way, if they move on Taiwan in a violent way, or India, you could see a move down. But other than that, perhaps not. Also, if we get a second wave of coronavirus to the extent that it causes lockdown again, that would also be a catalyst for things to drop. Stock prices are way overvalued compared to the economy that's supporting them under underlying support. So we should get a correction, guys, but whether it's going to happen this week, next week, or next month, or in 2 or 3 months' time, um, that's what we don't know. So in the meantime, anytime we get a dip, I'll try and trade it long. That's and then at some point we might get a drawdown, and then from there, yet again, try and trade it long. I don't think we're going to go down through that bottom, which is what I did think initially. When we got this and we were coming back up, I thought we'd maybe get a bit of a bear market. Looks like we're getting a bit of an L-shaped recovery here. Now, as we know, the S&P has given us a V shape, but I think there needs to be some sort of drawdown on it before you get any value off it again. But we'll look at that in a moment. Nikkei, there's the big push up last week because of the stimulus package that the Japanese government announced. Yet again, guys, you're going to at least need some sort of drawdown before you're going to get any value in that. Unless you're already in it, then you put your stop to zero and hope that it pushes on up. German's the same. You're going to need a drawdown to make it worth anything. I suspect it may run sideways for a while. French is the same. The only thing I would say about the French is that there's a possibility of a fifth wave in there. Now, I don't know fundamentally why you would get the fifth wave. I'm just looking at it from a technical point of view, guys. And sometimes when it sets up technically, it still happens regardless of the fact that you don't understand or know the underlying reasons why it happens. So there is the possibility that would push on up. Of course, the other possibility is that this is some sort of correction, which would then give you a drawdown into that area before moving off again. I would prefer to see that and trade long from there than try and trade that little trade there. If it's an impulse, we could be in a fourth wave and we could get a fifth wave, which should come to the 127 extension. You see it there, guys? but I'd prefer to see that drawing down and then trading it from there. UK. The UK still got to get some sort of deal done with Europe. So that's becoming the next problem for the UK. Although the companies that are in the UK index, folks, tend to be multinational companies that are based in the UK and are on the London stock market, the FTSE stock market. So they're not necessarily making their money, or certainly not the majority of their money, from trade between the UK and the EU. And therefore, they're not necessarily as affected as you would imagine they would be. But yet again, just looking at it technically, if you got a bit of a drawdown, maybe from there you would look for a short-term trade back up. NASDAQ, as we say, it's actually come very, very close to the previous highs. Maybe it pushes up there, but you can see on Thursday, Friday last week, I said this will probably consolidate and run sideways. When I say that, it could consolidate in a range there, guys. You know, it could push up to there and then run sideways, but anytime it comes down, I'd look to trade it long, unless we get, you know, the news out that goes, hey, this is going to drop like a stone, as we got over here. We did predict this over here. S&P, when I say we, I mean me, but I'm being polite, guys. S&P 500, same thing. You need some sort of correction. Listen, it could push on up there, guys. But if you're going to get in, you always need a pullback to get into it. The Dow Jones will be the same. Looking for some sort of pullback here to make it worth trying to get involved. Let's just go on quickly and have a look at the dollar while we're here. I say this every time we do one of these. We talk about it all of the time. We had the pullback from the overbought situation with the dollar during the coronavirus crisis. At this point, I said that it would stay in this region, either by, gradually moving up like that, or giving us a flat correction. It would stay in that region before starting to drop out of it. Yet again, it's always about timing with these things, guys. I suspect that this move could be the start of the move down of the dollar, guys. It's broken that bottom. Potentially, you could say a 1-2, and this is the start of the third wave. 1-2, 1-2-3. Looking for a fourth wave here, a fifth. Then you get a bit of a pullback of that equivalence. Maybe it's a flat. And then from there, you look for a fifth wave down. And then once that's complete, we then decide, well, how is it going to continue to move down? Is it going to consolidate again, or is it going to break that bottom and move on down, guys? That's a long way ahead, so we don't need to worry too much about that. But I think the trend is in that direction now, or at least that direction. It's certainly not long, guys. That is out. So it's either going to consolidate some more sideways, or it's going to drop. And that's okay, guys, because you can use that information and plug it into your major pairs, and then anything that's going long, you can safely trade it long against the dollar. And if you get lucky and the dollar goes short, then you'll get a big boost on it. In other words, if you go in to say something like the Aussie, yet again, you've got to find a way into it. But the Aussie's been going long, as it wasn't badly affected by Corona. It trades heavily with China. China seems to be out of it, so they're kind of a little step ahead of Europe and America. So it's been marching on up here against everything, by the way, not just the dollar. But if the dollar decides to go sideways and the Aussie continues to go up, then this will slowly move up. But if at some point the dollar made an impulsive move down, then you would see this taking off. The whole thing about it is trying to get in at the right place, guys, to get it away from zero, to get your stop to zero, and then keep your fingers crossed that the dollar drops. Now, obviously, back down here was the place to get in it, or even here, or here, or here. So, yet again, if you get the draw back down, try and trade it long, and hope that the markets don't crash in the meantime. Because obviously, the markets crash, the dollar will become a safe haven again, and then you'll get a big move down. But that's not probable, guys. It's a possibility. It's not probable in the short term. Maybe a little bit down the line, you get a correction in the markets. If there's some time between now and then the dollar may be down here before it comes back up again. But that's a big, big maybe, folks. I still think you're trending the dollars down. Okay, that'll do us for today, folks. Speak to you all again tomorrow. Bye for now.